Live from the First State, you are listening to the Financial Empowerment Show with the podcast king, Troy Bailey, and the finance queen, Awanda Hodge. The Financial Empowerment Show, creating new fiscal standards one home at a time. Give us a call now at 877-829-1099. That's 877-TAX-1099. And now, here's Troy and Awanda.
Welcome to another edition of the Financial Empowerment Show. We are in show number 4, Awanda, Finance Queen. How's that?
Moving right along.
Moving right along.
So excited to get to...
We are excited. Listen, touch that subscribe button. Subscribe to the Financial Empowerment Show. Give us a call or email. Email us at info@financialempowermentshow.com. If you have a personal question for Awanda, email Awanda at financialempowermentshow.com. If you have a tax question, email Troy at financialempowermentshow.com. And if you have any questions for the show, we can read your show. We can read your questions on the podcast and our YouTube channel. So we want you to be part of this because this is for you.
Right. We want this to be an interactive show.
That is correct.
We want to definitely make sure that we're feeding the people
what
they want, getting to the questions that you guys want, what's important to you.
That is correct.
So please send it over, share, like our page, share with all your friends and family.
Share.
And send us over those questions. So let's get to the show. Let's get to it.
All right. What's the show number 4? I know your pain. Reasons for poor fiscal management in America. Yeah. There's a reason for it. What do you say, Awanda?
Oh, I really think it's about education and mindset and what we were taught. It's definitely about what we were taught that kind of drives our habits. We were just talking about that, right?
That is correct.
About our habits and about, we named the show I Know Your Pain because it's totally relatable to us. Like,
we've been there.
Listen, been there. I'm still there sometimes, being honest.
Everybody has financial pain. From the millionaire on down. Don't let no one fool you. That is correct.
The only reason that the millionaires don't is because they have people running it for them. They have people actually taking control maybe and totally handling everything for them. That's the only reason why maybe perhaps they don't feel that pain. But at times they feel it too because you see them like they're in tax trouble because they let their accountant take over and then that person wasn't being responsible. But this is why you have to be in control of what's going on.
You have to be accountable for your financial future.
Definitely.
Listen, I had a tax audit with a client and the tax IRS agent told my client this. You know what they said?
What?
It doesn't matter who does your tax return. You are responsible to know what's going on that return.
Because you're signing it.
That is correct.
You're saying you agree to what's being reported on
That is correct. So the same thing with finance. Yeah. You're responsible. Listen, if you call or send us an email and we help you with your budget, be your accountability partner, at the end of the day, you are responsible for that. We're just a tool and help you with the resources that we have to create your budget, to control your cash flow, and so that you can build your financial tree, your money tree. That's our job. You have a job as well. So never hire a professional to do anything when you don't know what they're doing. You keep us accountable when you ask questions.
Right.
When you go to Awanda she can buy your stocks or mutual funds, whatever the case may be, or life insurance, you hold us accountable with your questions.
Right.
When you come to go over tax services to get your taxes done, you hold me accountable when you ask your questions. So many of my clients say, here's my stuff, take care of it. And then when they get the IRS letter, what do they want us to do? They want us to fix it. All right. So you have to understand what we do for you.
Right. And I would definitely say review everything after any meeting, review it. If you later have questions, follow up with the questions.
That is correct.
If you see something that is raising a red flag for you or that you don't feel like is right, don't just go signing off on stuff or just submitting stuff.
That is
if
correct.
you don't feel good about it. If you have an online account, with Fidelity or whatever other financial institution, log on from time to time.
That is correct.
See how your portfolio is looking. See how your investments are doing on your own. Don't just rely fully on that professional to only do it for you. And I will say, tuning into this podcast is the first step to empowering yourself.
Yes, it is.
Because at least you're taking some step to get more financial education. And that's one of my points for today.
You're investing in yourself.
Yeah, I definitely think education in any realm
is a reason. Lack of is a reason for poor fiscal
right, but education
management.
is a way to empower yourself.
That is correct.
Even if you pick up a book or a magazine or whatever about finance.
I'm gonna tell you
it's empowering.
You know the book that was a catalyst for me in my life.
Don't say Rich Dad Poor Dad.
I said
I knew you were gonna say that.
She reads my mind. Rich Dad Poor Dad. That is correct. I read that book back in 1999.
And so did it empower you? What did you get out of it?
It did. It empowered me. I looked at it and I said, you know what? I'm the last of 10 siblings. And so one of my reasons was that, wow, how come we struggle financially as 10 strong? You see what I'm saying?
Right.
Why can't we get together as a unit to be helpful to one another so our kids and grandkids can go to college and we can build something together?
So asking yourself those questions, Troy, again, is one of my points that I kind of, when I sit down one-on-one with someone, that I want them to think about when they're on their own, is that what were you taught growing up about finances and paying bills and saving and planning? Where were you taught? And does that need to be adjusted? And just getting conscious and real about that. Because that's a big thing. Because a lot of people are not even having that thought process to think about, well, how did my parents pay their bills? Like, were we always getting pink notices in the mail? Where our
there's another color?
Cut off? I'm just, there definitely is another color. There definitely is another color. But if this is how you saw your parents live, then maybe you just think that this is ordinary.
The way, that
is correct. The way. So challenging some of that thinking.
Right. And that's what it is. See, a lot of times in finances, we don't want to do it. We want to get that motor rolling. You see what I'm saying? To get those questions. Wait a minute, I don't have to live like this.
Right.
To reevaluate your belief system you have about finance. Because a lot of it is cultural mindset. We look at the TV, we look at the news, we think we think if we elect a Democrat, we're going to be financial better. Some Republicans think we elect a Republican, we're going to be better.
We are not going to get into politics.
Listen, we are not a politics show. That's another podcast you can tune into, and I don't have the address for it.
Please no.
But listen, that's one of the reasons, and that's just a cultural mindset that we have in our culture, is that we think politics plays an important on our personal finances. And guess what? Listen, I am not going to have a budget of $10 trillion. I have to whittle it down to my pond.
Right.
You see what I'm saying?
Right.
Your pond might be 30,000. Your pond might be 100,000. Your pond might be 15,000. It might be 60,000. Focus on your personal finances. Get a strategy and a budget for your personal finances, because some of that can be so overwhelming when we hear it. Oh no, are they going to have this when I'm 50 years old? And don't we have this when I'm 30? Focus on your personal finance.
So I think all goals need to be broken down.
That is correct.
To achievable items that you're working on daily, weekly, monthly, yearly. All goals need to be broken down. But when
5 year, 10 years.
Definitely. But when we're talking about spending, I would say to get your motor running, when you're going to buy something, think about, will this item increase your wealth? What value will it have once you buy it? Start thinking about these things. When you're in Target and your cart is full.
My wife, are you listening? Please, are you listening to this show?
I'm just saying, if you're purchasing something like art that has value,
right?
That's different from spending that same $1,500 just in the mall on something that.
Are you planning on getting a Rembrandt, Awanda?
I'm not.
Oh, okay.
I'm not, but I'm just trying to put something in the people's mind so that they understand that when you're purchasing, when you're spending, when you're purchasing items, you really should try to have some of these things add to your wealth.
Correct.
And there are things that you can buy that add to your wealth, that appreciate in value.
Like I want a 1969 Chevy Nova maroon 2-door convertible.
So are you going to get it beat up and then fix it up or what?
I'm not sure yet.
That sounds like a good project for you and your grandson.
That is correct.
But that would be something that it's going to add value to your life. And this is something that we definitely want you guys to start thinking about. When you're spending your disposable cash.
Because you have it allocated for that.
You have it allocated.
That is correct.
Is it adding to your wealth, or is it going to be something you're going to throw in the trash in 3 months? Or you're just not even going to.
Correct.
And even when you're buying Christmas gifts, I started giving my kids stock.
Did you?
For Christmas.
Stock?
Yeah, you can buy them and you can gift them. Yeah.
Okay. In their name or your name?
In their name.
Oh, wow.
So, my goddaughter too, and she's young,
Okay.
Because you're buying them all these toys.
Yeah.
And then, and I'm not saying you shouldn't give your kids toys. Absolutely. But.
Toys today to these kids?
Well, video games.
Whatever. That's it.
But mix it up.
I have a mutual fund for my grandchildren.
So you don't give them any toys?
I give them a book, and I let everyone else buy them the toys.
Troy.
They can buy them all the toys they want.
You're such a drag.
I know, I'm such a drag. But guess what?
You know your grandkids are going to be like, Papa always giving us these dry gifts. You have to mix it up.
They're going to be happy when they turn 18 with that mutual fund.
They will. But I'm just saying, you can incorporate these things into your life.
Correct.
And then your kids will learn a different way. Or your grandkids will learn a different way. They will grow to expect and get excited about checking their stock to see how it's doing.
That is correct. I think that's a phenomenal. Yeah. Gift them a stock, a mutual fund. I had a client who, now this is a true story. I had a client, her grandparents brought her Chrysler stock. I don't know if people remember. You might be too young, finance queen. But Chrysler stock back in the 80s.
Was it expensive?
Was on a penny stock exchange.
What?
Pre-Lee Iacocca.
So she came up, huh?
So by the time she was 18 years old, I'm doing her taxes and seeing this capital gains. It was phenomenal.
That's wonderful.
I remember because back in 1985, if that's the year I graduated high school.
Oh, you're telling your age.
I know, I'm telling my age. All right, go Wildcats. So that's a year I could have brought Chrysler. If I would have bought that stock and then, oh my God.
And just held it.
But you know what? That goes back to our point, education. Education.
Yeah.
Was I taught? So now you're teaching your godchild and your children, you're eliminating that. So they'll never have to say what I say at my age if I knew.
Yeah.
Because you instilled that in them.
Right.
That's wonderful. Give the finance queen a hand clap, everybody. I believe that's wonderful.
These are things that I learned over time. I remember when it was time for me to go to college, we had, back in the day, everyone bought savings bonds.
Oh, yeah, Series E's, yeah. Get them for $25
Hey, don't knock them because, listen, it's still a way of saving. When it's time for me to go to college, my mom gave me a lot of my savings bonds.
Didn't they discontinue that, the Series E?
I believe so.
Yeah.
But this was in the 90s. They
were
still, valid. And they still gave me something to use towards going to school. Anything that you're putting towards it, don't knock it.
Right, because it's a start.
It's a start.
That is correct.
You got to start somewhere.
I remember back in the day, CDs were like 12%.
Yeah, I remember CDs.
Okay.
Well, wait, don't say remember because CDs is still a financial
what are
product.
they paying? What, 0.5%?
Holding
it for 5 years?
But you know what? Listen, a CD is still a good product for someone that knows that they don't have self-control. And I'm going to tell you why.
Okay.
Because if you know you have to, say, pay your taxes on your house or something at a certain time, say every year, once a year at a time, you can go ahead and lock that money away in a CD.
Okay.
You know it's there. It's gaining a little bit of interest.
That's for those who don't have their taxes and their mortgage.
Right, if you don't have it already escrowed in your mortgage, or even any other expense. I remember I used to get a CD every year for my kids' summer camp.
Okay.
Because I didn't want to spend the money.
Okay.
And I wanted to make sure that I had that for them.
Wow.
So you can get a 6-month CD, you can get a year CD, and if you know you don't have self-control, which we want you to, establish self-control, because that's a big proponent of having your finances in order. But if you know you're still working on it, because we all are like a work in progress.
We are.
Get you a CD and lock that money away. It will mature around the time you need it.
Okay, 5 years, 2 years, 3 years.
They have ones short as 6 months.
Oh, really? Okay.
Yes.
Okay.
Yes.
Cool.
And there are other products too. There's T-bills where you can lock your money away.
Oh, wow.
There's other products. So call me, email me if you want.
I'm gonna call you, Awanda.
Yeah.
Call her number at 877-829-1099.
Yeah. So
ask for the finance queen and get that information.
So we
for
have
those
a question,
financial products.
right?
Actually, we have an email.
Okay.
We have an email from Paul, one of our listeners.
What's the question?
Okay, now this is okay, now I'm gonna read this email, so don't get excited. Paul works at a 1099 income, so that's the new gig worker they was talking about back in the pandemic.
Like a contractor?
Yeah, right. They do a Schedule C.
Gotcha.
And he wants to know how to hide his 1099 income.
Hide?
Right?
Oh,
yeah,
that's all you, Troy.
Let's turn off the mics. IRS is listening, and I'll tell you the answer. No, Paul, but there's an answer for that. Number one, I often say this. If you work under the table, that's how far you can go. All right? Put everything, hide in plain sight. Now, these are 2 or 3 tips that I can give you. Number one, if you're a 1099 worker, that means you're going to be filing as a Schedule C, all right? So all of your expenses that you do for that business can expense the income you receive. Let me give you an example. So if you make $30,000 as a gig worker, whether you're Uber Eats, whether you what's the other share ride?
Instacart,
Instacart,
Uber.
The whole 9 yards, all right? And I do have some clients who earn that type of money in these ride share programs. So all your expenses, your insurance, the portion you use for Uber Eats, the mileage, you can either do mileage or actual expenses on vehicles. Okay. So mileage is always advantageous 99.9% of the time. Your cell phone, all right?
Okay.
Any supplies that you use, your computer, all that good stuff, that it can reduce that income. Okay. Now, when that income is reduced, you pay taxes on what's left. So case in point, if you have $30,000, all your expenses add up to $25,000. So you're paying $5,000.
Oh, you're gonna pay taxes on that $5,000.
That is correct.
Okay, so the main goal with this is to track your expenses.
Track your expenses.
Gotcha.
Listen, I want you to go to the website and financialempowermentshow.com, and we're gonna have an expense list for all those gig workers that you can print out so you can track those expenses. All right. Go ahead.
So just quickly, what are like the top 2 things that maybe are missed expenses that people don't know that they maybe can
That's
use?
a good question.
Yeah.
A lot of them is their cell phone. They don't realize they can use their cell phone. Yeah. The insurance on a vehicle. So say if you use your car 30% of the time, 30% of your insurance bill is an expense.
Say I'm like riding kids to like Little League or something like that.
Okay, now that's not on a gig worker, but that is a deduction you can put on your Schedule A as far as the deductions for charitable miles. I believe charitable miles are like 17 cents a mile. Don't quote me on that, but
but there is still some
you can
type
do that
of deduction.
Right. Those deacons who's picking up those people for choir rehearsal or Sunday school and using your own car, you can use those miles. A lot of people think that they can use their time when they volunteer. Time is not a deduction.
Okay.
Only actual expenses like miles and stuff like that.
Understand.
But going back to Paul, I want to say he can create an LLC for himself and file as an S corporation. And if he wants to give us a call at 877-829-1099, and I can further explain that, because now you are moving it from your personal to a business.
Right? Yeah.
All right. And so that sort of eliminates some of the risk, and it gives you more, it is more advantageous in the long run, depending on what you can do.
That makes sense.
So, Paul, that was a very good email.
Thanks for the question,
All right. Now, if you want to hide more money, I got a pocket right here, and I got a pocket right here.
Paul does not want to pay those taxes.
I know. Okay.
So, hey, we have a quote for this week.
Okay, what's the quote?
It's right on line with what we've been talking about. Change your thinking, change your world. And I think Norman Vincent Peale is the one that said that.
Oh, okay.
But it's definitely on track of what we've been talking about, like shifting that mindset and the thinking.
Norman Vincent Peale. That was a great book. You read that book?
No, I didn't.
Oh man, that was a wonderful book. I think that was the #1 New York Times bestseller.
Maybe we should give out a book this week.
Listen, if you call this number 877-829-1099, we will send you that book of Norman Vincent Peale. Actually,
the first person, the first caller.
The first caller. There we go. We'll send you out a book of Norman Vincent Peale. I'm trying to talk to remember the title of the book, but I can't do it right
remember?
now.
We'll put it up on the website when Troy gets his memory back.
I get my memory back. You know,
do you have some statistics for us this week?
I do.
I know you enjoy giving the statistics.
I know. I got some stats. All right, you football fans. I got some stats for you. All right. Now listen to this. Starting in 2000, the state of Georgia, Idaho, and Texas began mandating financial literacy. Hooray for them. Yeah. Education for students participating in the program.
Wow.
The third year of implementation, and say that word for me, Awanda.
Implementation.
Yeah, that's the word.
Put that middle part in there.
Okay. The credit score increased by 10.89% in Georgia, 16.9% in Idaho, 31% in Texas.
That's powerful.
Wow, that's powerful.
That's powerful.
Even though I'm not a great proponent on credit scores, but you do need credit scores to get that house and purchase you want. Listen, the very fact that financial education can help you control your cash flow and pay bills is very powerful.
I hope that more states will start, implementing that, because that's that's really powerful. And so we really want to thank you guys for tuning in.
Thank you for tuning in for show number 4.
What are we going to talk about next week? What's next week's show about?
Oh, wow. We get into the nitty gritty. See, we were just trying to touch the surface on these first 4 shows, but now we're getting into the nitty gritty. We are going to talk about how to start your financial strategy.
Oh, okay.
Start your new spending
So we're going to be on the foundation.
Habits. That's right. Listen, hit that subscribe button. Tune into the Financial Empowerment Show next time, and you have a wonderful week.
See you next week.
That wraps up this segment of the Financial Empowerment Show. Until next time, send us your questions to info@financialempowermentshow.com. Whether you earn $13,000 a year or $130,000 a year, let Troy and Awanda help you grow your money tree.